But also, I want to keep, I want to tell you guys, inflation is cyclical. So, which always presents an investing opportunity. We see this is the federal funds effective rate. This is the funds rate. And we see, obviously, it always goes up and down. It's not really steady, honestly. There's not really a period of time besides we see between 2010, 2015. There's a few years where it's steady and then eventually it rises again and then drops. And then it's pretty high right now. We haven't had this high since, I don't want to say it, but the financial crash of 2008. And then it dropped a bunch. We got it down 2010, stayed pretty steady for a while. COVID definitely made it bounce a little bit, went back down. But right now we are in a weird spot where it looks like, we're on the way down, but it looks like there's going to be a little bit of, correctionary period like we see from 1995 to the year 2000 right here. So this presents a great investing opportunity in a bunch of stocks, but this Nvidia, this is something that doesn't really care about inflation. I wanted to point that out, that AI is not, the biggest that inflation doesn't matter that much, if you're investing in a stock like this. It does to a certain extent because of energy prices and, people running their GPUs, their data centers, things of that nature. So it does matter to an extent, but it's not the main thing when it comes to these stocks. So Nvidia is a great baseline for AI profits and momentum. So, if we look at Nvidia earnings next week, that's going to be a telltale sign of where the market is looking like it's going to go. And we see it is up actually 18% year to date. So, is this priced in? Nvidia needs to, obviously they're going to probably beat earnings. If I had to guess, if I had to, bet $10,000 on Nvidia earnings, I'd say they beat, but I can't tell where the stock price is going to go because that all depends on what their future earnings are. And as I take profit from the AI wave, this is what I'm doing. I'm moving into consumer stocks. So is this the bottom for consumer stocks? Honestly, I don't think so. I do think we see these fall a little bit lower, but stocks like Celsius, stocks like Elf are ones that aren't going to get hit as hard as other stocks where we're looking at like a luxury brand, for example, or a home building company, things of that nature. And then we look at Dutch Bros as well. I also think that that one won't get hit as hard because Celsius, for example, addictive company, addictive product, people are still going to buy energy drinks in a recession. You can look at Monster Energy's price. Actually, you can look at their stock graph and you can see that their stock graph didn't really drop during the recession. Same thing with Philip and Morris, which is definitely more of an addiction, but also inflation is going to affect Celsius. I mean, we could go down the whole rabbit hole, but same thing with Elf. This is the cheapest makeup company, the cheapest makeup brand. Elf is one of those companies where you're really going to invest in this one and you're probably going to benefit from a recession or something of that nature. And then Dutch Bros, people are addicted to their coffee. Are people going to stop buying their $5 drinks every single day in a recession? Probably closer to $10 now, but probably not. So that's why I think those stocks actually make sense in a case where we actually do hit a recession. I think these stocks are going to be cheaper, but they're going to make a lot more sense than you'd think. And there's still a lot of room to run for these AI companies, for these main beneficiaries of memory, of GPUs, of actually, building out these GPU infrastructure spaces. So there's still a ton of room to run. Like Nebius is up 150% year to date. I hold that in another portfolio. AMD's up 91%. Micron's up 142%. I mean, these companies are up humongous. So, you look at these companies and there's probably still some room to run, but definitely some profit taking going on along the way as you look at their graph. So makes a lot of sense. But do we see Micron hit $1,000? I mean, probably. We're probably going to see Micron hit $1,000. We're probably going to see AMD hit $1,000. We're probably going to see Nebius hit 500. There's a lot of predictable aspects to these stocks, and if they keep moving the way they're doing, like semiconductor stocks and stocks of this nature that are in this cyclical, hyperscaling phase of their company, there's not really anything that can stop them. And stock prices don't move, how you would think they move. Like if Nvidia is up 91% and they go out and report tomorrow that they just closed $1 trillion deal, it doesn't matter. This stock could run 1,000,000%. Everyone could be a billionaire from AMD. It could happen. It's not gonna happen, but it definitely could. Stock prices have no feelings or emotions, and they don't follow any rules. So keep that in mind. There's no rules. It might feel like there is. It might feel like, oh, AMD can only hit 100% year to date, but no, they could hit 300. So software is still a great bet and hedge as a long-term play, in my opinion. This is still how I'm playing software. This is my list actually from my most. These are the software stocks that I like the most out of all of the software stocks that I do own. So we look at CRM, we look at Now, we look at Adobe. These are all the stocks that I do like. and it's in the order. So ServiceNow I like the most because of their customer base. Salesforce I actually like the most because of their product, and then Adobe number 3. I think this one has a pretty clear-cut growth strategy, but I do think that this one does pose the most risk to AI. I still don't think it's a lot, but I think it does pose the most risk. But I think ServiceNow virtually zero risk, Salesforce not much risk at all, and then Adobe the most, but not really any. So that's my software stocks. But also don't get caught up in the short-term noise. We saw Trump went to China. He didn't really make any deals like we thought would happen. I don't care. I don't care. So, I mean, no, you shouldn't care either if you're a long-term investor. This doesn't really matter. There's going to be a lot of noise. People are going to be talking about it. People are going to say, oh, the market's going to crash. We didn't have, anything good happen from that trip, but at the end of the day it's not that big of a deal. So as a long-term investor, don't get caught up in that. But my overall thoughts are that every indicator points to overvalued in the stock market. We know that, so that's something to keep in mind, that the stock market is overvalued. There's no question about it. It's a fact that it's overvalued. But the question is, where do the opportunities present themselves? As I put in the second bullet point, there are always opportunities in the stock market, so be sure to always be looking out for those opportunities, because they are everywhere. No matter where you look, there's going to be an opportunity in the stock market to find a value stock, to find a growth stock, find a dividend stock, anything you're looking for. So that's what I scour the market for. But also there's long-term opportunities everywhere, and I think the flip is starting in a lot of these long-term opportunities, like I've discussed for months now, like software, like consumer stocks, and then even AMD. I'm up 300% on that position. That was an opportunity at one point as well. Still is.
The NVIDIA story, generally speaking, has been about an unstoppable company, now the world's most valuable company that is growing its revenue.
Almost a $6 trillion market cap. And they did drop 4.4% on Friday. I think this is profit taking. Maybe some insider news came out that NVIDIA missed earnings, but I don't think so.
News at about 75 to 80%, is highly profitable, has unprecedented margins in an industry where the economics are really brutal. And in artificial intelligence, but the commonality between NVIDIA and all of the companies that buy its chips, either to train AI models or to run them, is that the demand for that is outpacing NVIDIA's ability to supply it. And
that's great. Obviously, NVIDIA's bought out for years to come. But also another thing that this reminded me of is companies like Amazon, companies like Meta, companies like Microsoft are currently spending a lot of money. Obviously, you look at their CapEx, but this is also to develop their own chip. So these companies want to develop their own chip eventually. They see this as the next big thing. As for example, Amazon 20 years ago did not have AWS. Now it's the leading profit driver in their business. So this is to develop their own chip, and they're training these AI models, and eventually it's going to happen. So NVIDIA's demand is going to drop a lot when these companies develop their own chip, but nobody knows, quite when that's going to happen exactly. But back to the video.
That's always a pretty healthy position to be in. But as you alluded to, the kind of unknown is China. And the state of play for NVIDIA is NVIDIA has a base case assumption until this point where there is no revenues coming from China. And so you guys tell me, what was the conclusion of
So we've been talking about it all morning, Ed. It's still...
People are going to worry about this, but I don't see it as a big deal. I don't think we're going to see a long-term effect of no deals coming out of the visit to China. I don't think that's a big deal.
A little murky. Yeah. We don't know.
Yeah, and so the sell-off on Friday, that's the whole point. It turns out you can get a last-minute seat on Air Force One to go with the president.
Seats are available. Get the jump seat.
But it doesn't guarantee you at the outcome that you wanted to going there.
But I mean, NVIDIA wasn't the only one to see a dip on Friday. You also saw Micron, Intel, a bunch of these tech stocks losing more than 5%.
A bunch of these tech stocks that are up hundreds of percent year to date, and just in the past 5 years up multiple hundreds of percent. Keep in mind, there's down 5%.
Is this because those valuations are not realistic and the rubber is starting to meet the road there? Is this signs of a bubble, or is this just signs of the inputs and the factors you were just talking about?
Yeah, probably a little bit just giving back after many, many weeks of what a lot of people in the markets were calling a melt up, right? And so you always have to think about relative performance. I love to stare at squiggly lines on charts. I know that you guys probably saved the Bloomberg This Weekend audience from that, and I commend you for it. But sometimes you just got to look at the
We're an
squiggly
audio
line.
first product, so they generally
that's why.
discourage us
That's
from
why.
using
Yes.
too many squiggly
That's
lines
right.
because then we have to describe what people are seeing. But
I completely get it. So the squiggly line on Friday, as you quite rightly point out, was pretty sharply downward. But if you extrapolate out and look at Nvidia in
Yeah, I mean, this guy's completely right. If you look at NVIDIA over the past 5 years, you don't even know that Friday happened.
particular, since the end of March, it's just been on an astonishing run. I think it was up sort of 47% through Thursday's close, and all these other stocks that are associated with it had like a year's worth of gains in just a few weeks. Broadly speaking, equity markets kept hitting records. The S&P 500, the NASDAQ 100 is my favorite index because it's a tech-heavy one, and NVIDIA in the first 2 weeks of May accounts for most of that. So I think part of it was just saying, okay, we were about to have earnings. What did we actually learn from China? We're not sure. Everyone's kind of scratching their head. Everyone on Friday took a breather.
We were on air yesterday as details of some of these deliverables came across the terminal having to do with agriculture and tariffs. Are we still awaiting perhaps word on China's appetite for these NVIDIA chips? We saw Jensen Huang supping noodles around Beijing and enjoying the local scenery and
drinks,
all of that. But is he or North?
Yeah, I mean, I think this is more of a publicity thing, too, than to make deals. I mean, obviously, that was the hope coming out of it. And I think a few deals were made, actually, with NVIDIA's chips. So it's not all bad. You got to think that actually something did come out of it, which I very well could see nothing coming out of that.
Are they still optimistic that there could be some announcement here in the days ahead?
What the president said was that he discussed the issue of H200, which is a depowered variant of, or a lower power variant of a prior generation of chip that NVIDIA makes, not its latest chip. And the president, as the president puts it, China's not interested really because they want to support their own domestic industry and their own domestic chips. And so, like, the reason that I was joking, but the reason everyone's saying, well, what was the net outcome of that trip is nothing's changed. The US had already licensed NVIDIA to be able to allow to export their chips from the US to China on a technical basis. Jensen said in March.
So we see China is not that concerned. They don't want NVIDIA's chips as much as, you would think they do because they want to support their own economy. They don't want to pour millions and trillions and billions of dollars into the U.S. economy through buying NVIDIA's chips, which makes a lot of sense.
I've got orders from Chinese companies, but it isn't up to either of those people, the president of the United States or Jensen Huang. China isn't allowing them to do this yet. And so, again, it's a base case assumption of zero.
Ed, before we let you go, we've only got about a minute left, but you are heading to Vegas for the Dell Technologies World Conference. You're going to speak to Jensen Huang along with Dell CEO Michael Dell. What are you expecting and what should we be on the lookout for?
Yeah, they're very close business partners, very close personal relationship. Dell assembles servers. Servers go into data centers, and it's as simple as that. And, historically, NVIDIA didn't sell its chips directly to the market. It needed Dell to sell to all kinds of companies. They're trying to make the idea of owning your own data center great again. What we call on-prem, but don't rely on cloud computing companies. Build your own. And that's kind of a bit of what the story will be. But please tune in and I welcome audience questions. You know where to find me. I always love it when you guys submit your questions too.
Let me just pick up on this quickly.
I don't know if you want my questions, but probably David's. Yeah.
But this is a thing now. We have Jensen Huang with another CEO. They sit down and compliment. This is something that they really like. NVIDIA likes to play up, the point of partnership.
I'm just...
Yeah, I mean, if you look at how many partners NVIDIA has, it's crazy. And they need that for their business to do well. Which
stating, I have no idea if it's a part of the deal, a part of the contract between one company and another, but Jensen appearing alongside one of his partners in an interview or on stage is something that's happened regularly for the last 3 years.
So that's all that we have for today's video, guys. Pretty interesting news report right there. So if you did enjoy, be sure to smash that like button. Also subscribe to the channel. Thank you guys so much for watching. I'll catch you in the next one. Peace.